Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This weekend technical analysis video for Monday, June 13th through Friday, June 17th, 2011 is sponsored by Realtek. Alright guys, we're going to get right into the mix now and discuss the whole week from last week. We're going to look to next week, what to expect. Where's this market heading? Is it going to continue to fall? Is it going to collapse? Is it going to rally? Maybe a bounce back next week? And again, we'll find out by the end of this video. First off, let's discuss Friday. The Dow Jones Industrial Average down 172 points, NASDAQ down 41, S&P 500 down 18 points. The markets in the last 2 weeks, really week and a half or so, since June 1st. If I zoom out, you can see exactly what I'm talking about here. Here is June 1st, 601. The markets have dropped about 6%, just under 6%, and that's essentially in a week and a half to 2 weeks, a huge drop. Now, if you go back a couple more weeks to really in mid-May or early May, the markets are down about 7+%. So you've had a big fall, especially in the last 2 weeks. The markets, again, though, are showing no signs of finding any ground yet. Now, the key about the charts, if we zoom in on the intraday chart to Friday, it's very interesting, and I'll show Thursday as well. First of all, you did have a bounce day on Thursday. Now, Thursday happens to be a key time count based off of In the Money Stocks methodology. I can't really discuss that because it's premium stuff for our methodology viewers and webinar players, but nonetheless, the bottom line is you had a little bit of a bounce on Thursday, but towards the end of the day, the sellers came back in, and this was very telling of Friday's activity because anyone who bought early in the day said, no way, I'm not holding into Friday, and sure enough, that was the right call as it sold off into the end of Thursday. Friday, the markets had a river theory, which was a key gap down, and the markets collapsed all the way here. And again, you can see we shot sharply lower, a little bit of a bounce, went even lower, and then towards the end of the day, we got a nice announcement from the Federal Reserve that some key rates for the banks would be lowered from 3% to 2 to 2.5%, and that's actually what caused this midday, late day rally in the markets. You had bank stocks taking off to the upside, and the bank stocks is interesting because those stocks have been the most beaten down. And again, a lot has to do with regulation and this and that. Well, again, the Fed is trying to bail out the banks in a certain way by lowering their key rate that, again, was mentioned and alerted on Friday. If you want to see exactly what I'm talking about, take a look at Goldman Sachs, guys. When that announcement came out, Goldman Sachs was trading here slower on the day. By the end of the day, Goldman had rallied up $2.40. And again, look at that spike up. Take a look at Morgan Stanley. Morgan Stanley, a beautiful move as well here as we take a look. So you can see that move up. And Bank of America is another play here. Take a look at the Bank of America chart. I mean, just parabolic moves across the board on these financial institutions. Now, the interesting thing about these, just the day before or 2 days before this happened, we had Ben Bernanke giving a speech, and Jamie Dimon actually came out and said, hey, listen, if you guys don't stop these massive regulations, you could cause another recession because these banks were not going to lend. The banks are not going to lend. And it was very interesting to see that and then see what happened on Friday with the announcement from the Federal Reserve. It was almost like Jamie Dimon came out and threatened the Federal Reserve, and the Federal Reserve, in a weird way, caved. I mean, it was very unique to see that and very interesting. But either way, the banks, again, I had mentioned last week in an article on the Rant and Rave blog that the banks were making a pivot low and going to have a short-term bounce up. And again, you probably would see a multi-week bounce in the banks. I do believe it started, folks. And again, I predicted this before it even happened, this move up on Friday. And again, I think it should continue into next week. And if the banks really firm up and we get the dollar to stop going up, then you should see the markets get a little bit of a bounce next week as well. Options X is next week. We know what Options X mean, right, guys? Options X, a lot of these institutions are underwater on a lot of these puts that they sold by a pretty hefty margin. Their premiums that they charged when they sold the puts are not going to cover the losses right now. They're going to have to try to get this market up. So even though maybe Monday gaps down, who knows, we'll watch to see what happens on Monday. I do think by the end of the week you see a nice little float up in this market, maybe a small bounce of 1 to 2% as they continue, or the large institutions try to get back some of that money that they are losing on these puts. All right. Now, again, the downside in the market, you might say, well, what was the cause of this on Friday? I mean, why has the market been so weak? Well, part of it's been the Greece and European situation. We know that Greece needs another bailout. That was more kind of pressing on Friday, which also caused the market to drop. But what's going on with Europe, and obviously what's going on with the jobs picture in the U.S., is all stemming from the strength in the dollar over the last few days. And if I go to the UUP chart, which is the ETF that tracks the dollar here on my Realtick charts, you can clearly see that the dollar gapped up on Friday, and it continued to really go up throughout the day. And each peak in the dollar here before a pullback coincides with a bounce on the market. So when the dollar was pulling back right here, starting at around 11 o'clock or so, please take a look at the SPY. You can clearly see the bounce right here at 11 o'clock. That's where the markets start going up. So as long as the dollar's going up, the markets are falling. As soon as the dollar starts to pull back, the markets get a bounce. The next push up in the dollar coincided with this next dip in the markets, and then obviously we got the news to push it up and so forth. But nonetheless, it's an inverse relationship play with the dollar. The dollar is essentially the dog. The markets are the tail. So the dog is wagging the tail right now, and you have to expect that to continue. The question is, will the dollar go up or down? Right now, if you go to the daily chart of the dollar, let's punch that up on the UUP, you can see we've had a nice downdraft, but last week, and especially on Friday, look at the massive push in the dollar. Now, the one thing that could be positive for this market, and I'm just going to throw this out right now, is that the dollar is up into these two moving averages on the daily chart. So again, now could it gap above and do a river theory? It could, but if it doesn't, you probably get a little pause on the dollar after Friday's big move, maybe even a little bit of a pullback, which could save the markets early in the week. And again, I still think there's a possibility of continued selling early on Monday as panic sellers try to run for the exits, but at some point I think you will see a little bit of a push up. It may even start with a gap up or a neutral move on Monday and continue up into next week. So we'll watch very closely and again analyze it in the nightly videos. I do the nightly videos personally in the Research Center. Remember, folks, the Research Center includes everything listed at inthemoneystocks.com under Research Center. It's about 6 different areas that you can go in, you can explore, you can watch educational videos, you can watch market analysis videos. There's trade alerts constantly being put out on the hot charts and alerts. We send out text and email alerts when those are posted. Hidden Gem will be released on Monday, folks. This is a new small cap that will have a 50% upside within 6 months, according to my analysis. I encourage you to join for that. And remember, we offer a free trial, so take the free trial. There's no obligation, folks. As long as you cancel that free trial before the end of the Research Center free trial, which is 7 days long, you will not be charged. So it's really, you might as well take it. What do you have to lose? Well, that's my point. And again, you're going to get the Hidden Gem on Monday. You're going to get all these new alerts that we've been putting out. I mean, it's just a great time to be in the market to make money. Whether the market's going up or down, we don't care here at In the Money Stocks. We're traders. We're swing traders. We're going to play the up move, and then we're going to play the down move, and then we're going to play the up move and the down move over the course of 1 or 2 weeks. It's a beautiful thing. All right. Let's go back to some other key charts here, folks. We'll go back to the SPY. What I want to show you here, we're going to start with the 10-minute again. And you can see how the 10-minute fell here. There was a beautiful river theory on the 10-minute. It fell down, it gapped down. That tells you it's going to most likely go lower. Now, why would we suggest that? Well, when you have a river theory, what a river theory is, and it's a proprietary technique at In the Money Stocks, and I'm not going to explain it too much because, again, these videos are free, so I don't want to give away all the secrets. But when you gap below a certain amount of key levels, that triggers a river theory where when you gap below those levels, you will continue going in that same direction. And sure enough, as you can see here, we closed on Thursday above the 50 and above this green trend line, which matched the pivot highs right here from Wednesday. The gap down took us below that level. It even took us really below this little pivot right here, as you can see. So you really gapped below 3 levels, 1, 2, 3, and again, the market could just not hold up, and it came all the way down here, piercing this little pivot low. We bounced back to that low, came all the way back down, bounced again. This is a bear flag, classic in spirit of bear flag. Take a look at this, folks. That is a classic bear flag, and again, we talked about that in the intraday stock chat beautifully here. Markets then went lower, and then we actually hit this pivot low, and it's so interesting how the news from the Federal Reserve, which was positive for the banks, coincided with this pivot low. Now, you might say, well, what's so interesting about this low at approximately 127.25 to 30? The answer is very simple. If you go to your 60-minute chart, you will see that there is a master level there, and if we zoom out and show you, see this little pivot low right here, going back to the 17th of March? That pivot low is exactly what we hit here, and notice how, again, the news coincides with the technical charts. News always is kind of foretold by the charts. If you can read the charts, there's no need for news. You'll be buying the level even before the news comes out. You'll be able to play it and make money on it. And again, that was your level to buy right there at around 127.30. And look at the bounce that you got. You actually got a bounce. If we go back to the intraday chart, the market surged all the way up to 128.40. So it was over $1 bounce on the SPY just off of knowing that that level was going to be a buy right there. All right, so again, you have to learn the levels. These are the levels going down on the 60-minute chart. You'll have another support level at 126.55, another key support level at 125.95, and then the master double bottom will be at 125.25, which again, by the way, if you go to your daily chart, that coincides with the 200 moving average and the pivot low right here. It's a very, very important level. And by the way, on the daily chart, you can see that same level, that 127.30-ish level right here. See how it held? You can see this little pivot low. And again, we'll see if we break through on Monday and go towards this 200, or do they bounce this market up for a little while. Ultimately, I think it's going to the 200. I don't think that's even a question. The question is, does it bounce next week before going there? My bet, and if I obviously have money at stake here as well, my bet will be that it does get a little bit of a bounce. Whether it starts on Monday or Tuesday is up in the air in my view, based on what I'm seeing in the charts and based on the the pullback into the close on Friday. Maybe we see a little bit more selling there. But either way, I do think at some point next week you end the week positive. We've had 6 straight down weeks. I do believe this next week into Options X will be a up week. I don't think it's going to be a big up week, but I do think it will be a small up week. So again, we'll analyze that and continue to follow it. I will give out trades next week in the Research Center, in the Intraday Stock Chat. Remember, free trial, 7 days for both. You can choose either one or both at the same time, Research Center or Intraday Stock Chat. All right, so get these trade alerts that are going to be coming out. I'll be posting some Sunday night. We'll be doing a No Hype Live Sunday night as well, so you want to be involved. If you're going to take the free trial, I suggest doing it on Sunday, because Sunday night there'll be a live forum where we're going to discuss. You can ask questions. I'll analyze the charts. We're going to go over trade setups for next week, and that's a live forum from the No Hype Live broadcast, which is also part of the Research Center. So really, in all fairness, that Research Center is just an amazing thing. Again, you should check it out. All right, let's go to the dollar again. I just want to cover the dollar on a daily chart again. We have it up into this resistance. If you get over that level, you may continue up here towards this point. Now, eventually, I do think the dollar goes back to these highs, maybe even higher. But the question is, into next week, what does it do? And we are into 2 moving averages here. By the way, look at the pullback here. Pullback right into the gap window area, right towards gap fill, and that's where you got the bounce on the dollar. All right, now let's go over a couple different things. I want to look at gold. Now, gold is an interesting play here. Gold had a little bit of a downward move on Friday, but you're still hovering above this line of support and the 20 moving average. And it's not that far. I mean, this could be consolidation before a pop into the double top. Again, I think the pop into the double top will be resistance. On the way down, if it breaks the 20 and breaks the 50, this thing could fall very, very quickly. But again, I don't foresee that happening in the short term anyways. I think there's too much uncertainty with Europe, too much uncertainty in the U.S., so I just don't see there's a lot of downside in gold right now. Even if the dollar were to get a major bid, I think people would still be interested in buying gold. Yes, it could pull back a little bit more. I just don't think there's massive move down. I'd be shocked to see the gold get to the 200, for instance, in the next month or two. I'd be very, very shocked to see that. All right, SLV, silver, had a nice down day on Friday, but silver's just been going sideways here, and we can erase that one little trend line. If we zoom out a little bit, you can see what's happening here. You actually have a little bit of an in-spirit of bearish pattern on silver. I'm more bearish on silver than I am on gold. The reason is because silver's an industrial metal. Silver's an industrial metal, folks, so keep in mind the fact that it's partially based on economic demand. Even though it's a store of safety, and it definitely is a partial store of safety, it's also an industrial metal. So it's used in 2 fronts there, and if the industrial side, if the economies are slowing down, a little less of demand for silver could bring it down. You do have an in-spirit of bearish pattern there. I do think this has a chance of going to the 200 in the next month or so, even possibly sooner, so just be aware of that on the silver trade. All right, last but not least, let's cover the USO here. USO has been trading sideways here. Now, the interesting thing about the USO is that you actually do have an in-spirit of longer-term bear flag here. All right, now again, when does this fall? How does it fall? We'll have to watch and see, but you can ultimately see that you do a downward move and then choppy sideways consolidation now for about a month, if not a little bit more than a month, almost 2 months, and ultimately this probably does break down lower. I will give out the buy level for it on the in the Research Center Hot Charts and Alerts, so again, you want to be sure you're involved there so you can be on the long side when it's the appropriate time to go long. There's a lot of amateurs out there that will pick the wrong times. When you play a swing trade, when you invest in something, it's so important that you get the level that is appropriate to buy. The key low, for instance, if you're buying or if you're shorting the key high. I can't tell you how many times I've seen, amateurs short or go long a stock, and then they're out of the money 10%, and they're like almost stopped out, and then even if it does eventually bounce back and go in the right direction, maybe they get back to even at that point. You want to be buying at the lows and selling at the highs. We do that. We do a rinse and repeat type analysis that's going to allow you to do that based on our methodology here at In the Money Stocks, all right? So again, keep that in mind. Now let's just go to a couple financials and key stocks. Goldman Sachs, again, one thing on Goldman Sachs that's interesting is that you can see how much of a sell-off it's had since 2011. Although again, we did call the low last week in the financials, and that looks to be a great call. You can go back on the hot charts, excuse me, not on the hot charts, on the Rant and Rave blog. Plus, we'll update that article in the article archives where I called the bottom here. I think it was on Wednesday I called the bottom of the financials, and so far so good as we've had a huge bounce. Morgan Stanley, same thing, nice little bounce on Morgan Stanley. Bank of America, same thing. Bank of America bouncing up. I mean, you could go to any of these charts. Wells Fargo, same thing, getting a beautiful bit of a bounce here as well. So the financials across the board are looking very, very good for a continued bounce here. It'll be interesting to see if they have a pause day on Monday and then continue up, or if they just continue to rally on Monday. We'll watch again very closely here and keep you guys posted. But the low, again, I do think in the short term this low is in. And again, so far, we'll continue to give some trades out on these financials in the coming days. All right, let's go over a couple other plays. Some stocks that really took a hammering on Friday's down day in the markets. Clearly, we have Exxon Mobil. Exxon Mobil looks like it's near a breakdown here, guys. It's been holding this level right here. If this breaks, it'll have a minor support level right here, which will probably give it a 1 or 2, 3-day bounce off of this level here at around 78.85. If it takes that out, you're going right to the 200. So this does not look like a healthy chart. It's below the 2 moving averages with only support at this point and then ultimately the 200. Not a good chart. Chevron also got pounded on Friday. This is probably heading lower to this general area down here, which will be right around 97 to 97.50. And again, take a look at Apple. Apple's nearing the 200 moving average, folks. We are almost there now. This is a level that I talked about for weeks that it was going to do. I remember this clear call so clearly. I kept on saying how, everyone was saying, well, this is a bull flag in spirit of on Apple. And I said, actually, it's not. It somewhat fits the criteria, but it's not good enough. The reason is it should have broken down already. It should have broken up already out of this pattern based on count systems here at Min the Money Stocks that we know. And it didn't. In addition, when it was going sideways to lower here, the market was making new highs, new 52-week highs. And that was an indicator as well. So I kept on saying, guys, this is going to go down. This is going to go down. This is going to go down. Sure enough, it broke down, bounced, and then is almost at the 200, which is also a key level. I think it could pierce the 200, but somewhere around that 200 probably gets a little bit of a bounce. Maybe it pierces on a Monday gap down or a Monday early sell, and then maybe we'll see if the market does bounce back at some point. But nonetheless, very interesting market right now. I can't stress that enough. Be in the research center. Get that free trial for the trade alerts, for the No Hype Live Sunday night, for the Monday debut of the Hidden Gem, which again should make 50% in a quick manner for us who are play the small caps. It's a great play, and again, I'll be posting that probably between 10 a.m. and 10:30 on Monday morning. And again, it's just more and more alerts coming out, more and more trades, profits, and it's all for you in the research center. Take that free trial, try it out, no harm. You can always cancel before the end of that free trial and not get charged. Same thing for the chat room, folks. We're in there giving play-by-play analysis all day long, giving trades out, scalp trades, swing trades, you name it, it's all there. You can ask us any questions you want. We'll give you all the insight into the markets. All right, guys, take care. Have a great rest of the weekend. And again, I'll see you all on Monday.